Thank you, Madame Courville. Bonjour. Good morning, ladies and gentlemen. During my speech and that of François Desjardins, forward-looking statements may be made, and it is possible that actual results may differ materially from those projected in such statements. For the complete cautionary note regarding forward-looking statements, please refer to the bank's 2015 annual report, which can be found on our website. Fiscal 2015 was another year marked by good core performance for Laurentian Bank. Adjusted net income reached $172.2 million, or $5.62 per diluted shares. Adjusted net income increased by 5% from a year earlier, and adjusted diluted EPS increased by 6%. Adjusted ROE stood at 12%. However, we took a special impairment and restructuring charge of $61.8 million after tax. This special charge was the result of a comprehensive strategic review of our retail activities, which determined that the value of certain assets was impaired in light of our transformation plan. This resulted in net income of $102.5 million, or $3.21 per share. Core earnings were positively impacted by the strong momentum that we have in key sectors. Specifically, in 2015, we achieved growth in loans to business customers of 18%, and residential mortgage loans through B2B independent advisors and brokers of 34%. As well, income from sales of mutual funds grew by 33%. Overall, our revenues in 2015 grew by 3%, while adjusted non-interest expenses rose by a similar amount. We remain very satisfied with the credit quality of our loan portfolios. In 2015, the provision for credit losses stood at $34.9 million, or $7.1 million lower than in 2014. This represents a ratio of provision for credit losses as a percentage of average loans and acceptances of only 12 basis points. Contributing to this low loss ratio are disciplined underwriting standards, as well as no direct exposure to the oil and gas industry. On December 17, the bank completed the issuance of 1.3 million common shares for gross proceeds of $67.5 million. The bank also determined that under its shareholder dividend reinvestment and share purchase plan, that reinvestment related to the dividends declared would be made in shares from Treasury at a 2% discount. Furthermore, on March 17, the bank completed the issuance of 5 million non-viability contingent preferred shares, Series 5, for a total proceeds of $125 million. Having additional capital allows the bank to transform and continue to take advantage of opportunities as they arise. Furthermore, the Board of Directors increased dividend on common shares twice in the past year, in June 2015 and again in December 2015. On February 25th, the bank reported good financial performance for the first quarter of 2016. Adjusted net income totaled $43.7 million and adjusted diluted EPS of $1.39, respectively 8% and 5% higher than the previous year. Net income and earnings per share were $42.7 million and $1.36, respectively. ROE stood at 11.9%, an improvement over the 11.3% in the first quarter of 2015. Earnings were positively impacted by the strong momentum that we have in generating organic growth in targeted segments across Canada. This drove solid growth in net interest income and contributed to an improved adjusted efficiency ratio and a positive adjusted operating leverage. With the introduction of the transformation plan aimed at improving performance, the bank will focus on meeting its strategic objective to double the size of the company by 2022 and achieve an ROE that should increase to 14% in 2019. With the implementation of ARRB, ROE should further increase to a level which would be comparable to the Canadian banking industry within 7 years. These strategic objectives translate into the following medium-term financial objectives: grow diluted earnings per share by 5 to 10% on an annual basis, and move the efficiency ratio below 68% by 2019. Furthermore, we will continue to leverage the bank's strengths to achieve the 2019 growth targets. In conclusion, we're very satisfied with our results, both in 2015 and for the first quarter of 2016. At the same time, we are confident that our transformation plan will allow us to attain our objectives and solidify our foundation for sustainable growth. Merci beaucoup. Thank you for your attention, and I will now return the floor to Madame Courville.